Palisade Radio is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Hello everyone, this is Colin Cattell. Welcome back to another episode of Palisade Radio. Today we have a new guest on the show. It's Steve Todoruk. He's a broker at Sprott Global Resource Investments. Steve, welcome to the program.
Hi, thanks Colin. Good to be with you today.
Steve, the market has certainly been changing a lot over the last couple months. In fact, there are calls that we're once again in a bull market, and this 4.5-year bear market in the juniors has come to an end. I'm not sure if you would have the exact same take on that as a whole, but what do you see developing in the junior market currently?
Well, first of all, we've seen a lot of false starts in the last 4 years where we thought and hoped that the bear market was behind us. So I'm not about to, at this point, figure that it's all behind us officially. It's nice to see and experience. There's, what we can say is that there's certainly some indications that some of the gold mining stocks are behaving positively. We're seeing some nice share price rises, and that's good to see. And I think it started, we still haven't seen a general outbreak, but in particular, for the last maybe 4 months now, I've been talking to my clients about a little more than a handful of Australian and Canadian gold mining companies that the share prices have gone up very significantly. And, that's obviously a positive. It's very easy to identify why. In the last year to year and a half, the Canadian and Australian dollars have gone down about 25% compared to the U.S. dollar. And in just about every mining operation in the world, one of the major costs are your fuel costs and other such items, the big mining trucks and whatnot. Most of the costs of those operations are paid in the local currencies, and then at the end of the day, you get to sell the gold in U.S. dollars, and there's an instant extra 25% profit there. Another nice bonus for all those companies, as well as it in the same time frame, oil prices have plummeted, and as I touched on a minute ago, fuel costs are one of the major costs of an operation, so they've also saving a lot of money on their fuel, which is even a little more profit. And that's all hitting the bottom line financially for this small group of companies where they've got a nice amount of money in the bank account and they've got good, strong free cash flow. And as long as those local currencies remain weak, those companies should continue piling up the cash. And, as a general principle in investing, investors like that in a company.
Historically, looking back at the bull markets of the past, oftentimes seniors, the biggest companies, lead the charge. This time around, it seems like a lot of the seniors, and we don't have to name names, have mismanaged to the point where maybe they won't lead the charge, and some of these mid-tiers and smaller caps are going to be the ones that really take off first. That's certainly what we've been seeing over the past couple weeks. Do you have any comments on that?
Yeah, I would agree. Again, when we move from a bear market into a bull market in the gold space, it's usually the big funds, the sophisticated investors that lead the charge. They're the one that have the foresight. They basically make the market. And when that big money, starts to place a bet coming out of a bear market, they're going to go with the most liquid stocks. They have to. They're not going to go into tiny little speculative juniors. So historically, that money's going into the big miners, Barrick, Newmont, Goldcorp, Kinross, etc. And then if it sticks and that starts to look good, then you start to see a trickle down effect where eventually you get into the juniors. That model may be broken this time. Just the disarray and the damage and the self-destruction that a lot of the big miners led by Todoruk have gone through may see that change this time, where they may lag. We've seen in the last couple of weeks that even a Barrick is as bad a shape as they're in. Their stock's up quite nicely. I think it's up about 25-30%. I'm not quite certain on those numbers, but it's up quite nicely. But these small to mid-sized gold miners in Australia and Canada are definitely outperforming that. So they're obviously the eyeball. There's more and more eyeballs on these Australian producers right now than I think there ever has been outside of Australia, and it's just because they're doing so well.
You said to me before the phone call a truth, which is after every bear market comes a bull market. Everyone's looking for rays of hope right now, and we can look back historically and say what indicates that we have entered a bull market. Certainly, a certain percentage move over a certain time frame indicates a bottom being in. When does a ray of hope, like we're seeing now, turn into, yes, we have entered the bull market? And have you reached that point yet, or do you still think this is just a blip before more lows come?
Well, I'm not going to say I think more lows are going to come. I don't think anybody can predict that. Like I say, the last 4 years have been something that, I really haven't seen in my 38 years in the mining industry. I've been through several bear and bull markets. The only time you know in a bull market officially is when you can look in the rearview mirror and say that was the bottom some time ago. So, for what I want my clients to try and do is just be positioned in the best stocks. Today you always want to keep refining your portfolio and just make sure, things are solid even though it's tough out there. And when that bull market comes, you'll be able to look back and say, okay, I did well, I got in right.
You said you haven't seen this in the past bear markets. I guess in terms of how bad the markets have gotten or how much financing dried up. In fact, looking at an article that you just put out last week, it shows a chart whereby the amount of cash held by junior gold miners in the TSX has dropped from something like $3.5 billion in 2012 to the last recorded number at the end of 2014 was maybe $1.5 billion. I want to ask you, from looking back at all the other bear markets, what makes this one worse? And maybe is there anything that is not worse in this bear market than what you've seen in the past?
The last bear market I recall was 1998 to 2001. I was running two of my own junior mining companies, and it was horrifically ugly. And I still ask myself today, is it as bad today as it was then? I think it was. That didn't last quite as long as this, but every bear market has a different duration. They're not all exactly the same amount of time. In the bear market, the same things tend to happen and repeat themselves. We've seen this market, money dries up. Investors don't want to invest in highly speculative junior companies. They probably don't even want to finance the seniors. Again, I think we're going back to this small handful of gold producers that are doing well. You're going to start to see, the money come moving in from the sideline, either financing those companies or financing the next tier down of companies that people are going to predict. Are they going to move next? Or are they going to follow those ones that have moved strongly? So, that's where where we start to move from a bear market into a better market. I won't say a bull market. Again, we've seen so many false starts in the last 4 years. I just want to see us slowly and steadily improve off the bottom. I don't want to see the proverbial hockey stick shaped curve, just shooting upwards. We could, we've been so beaten up that if the big money decides that it's been brutal for so long and they want to get in quickly and bet hard, we could see a really quick lift off in the share prices.
Let's go back to bifurcation a bit, because that's what we've been dancing around here. And that describes a phenomenon by which the strong companies separate themselves from the less well-positioned, and they really start to move, at least at the beginning of the market. Can you give us a couple examples? I know in an article you put out, you talked about Klondex mines and Evolution Mining, and pull on the currency differentials, the oil prices dropping, and why these companies, in your mind, are so much stronger than maybe some of their peers.
Well, I don't know if this is going to quite answer that. You look at, there's something interesting has been happening, and we mentioned Evolution, and I think some other companies that did similar things were North Star Resources and Oceana Gold. Those three companies have been buying, producing gold mines and fairly good quality gold mines from bigger companies. Barrick, Newmont, and Goldfields also gold mines that they had in Australia to, partially to, pull in the range and focus in on their main assets or their main mines, And by doing that, they said, let's get rid of the small mines. They're not hitting the bottom line, but they're also distracting management. And so when they're selling off those, somebody's buying them. You know, companies like North Star and Evolution and Oceana were able to raise the money to go buy those new mines. So while the big guys are selling mines, they're basically, getting a bit smaller. While on the other side, you've got these Australian companies that are buying mines. They're growing into the next mid-tier miners. And investors obviously, because Barrick and Goldfields weren't selling bad mines. Those were good quality mines. They're just too small for the big company. And again, what's really good is those are good quality mines, but when you add on a 25% currency play for extra profit there, that's huge. You can't possibly improve the quality of a mining operation anywhere near 25%. That's absolutely huge. That covers a lot of slop if you want. And then you add on the extra savings in their fuel costs. It's a great situation.
Steve, investors have differing risk appetites, and that dictates the type of gold or silver investments that one would make. At the one side of the spectrum, you have the large caps, which are at least supposed to be the most stable. And then on the very other side of the spectrum, you have these micro cap junior exploration companies. And on that side, you can get a lot more upside, especially because of purchasing a warrant attached to a private placement. Can you talk a little bit about the type of gains and pull on what you've seen in the past that can be made in this sector when it finally does turn around, and especially what can be made when you play with things like warrants?
I think you're touching on trying to hit a home run, like if we're getting into stock cheaply and making lots of money really quickly. These small to mid-sized gold producers I'm talking, that's more of a gradual way to make money, or a gradual way to see their share prices go up quite nicely, quite handsomely over time here, as we've just seen in the last 6 months type of thing. The real big speculation or shot at a home run really only comes if a little company makes a brand new discovery. Again, I think I mentioned before that we got on the phone here. The most exciting thing in the mining industry, if a little company makes a brand new good-looking discovery, and then they're able to, over the next couple of years, just keep moving the drill over and growing it bigger and bigger and bigger to the point where they've officially done it. It's a big deposit. It's good quality. It's got good grade. Hopefully it's in a good location, reasonable infrastructure and whatnot. And then a major mining company comes in and takes them over. We've seen it happen with Robert Friedland's Diamond Fields International when he discovered the Voisey Bay nickel deposit in Newfoundland in the 1990s. I think some buddies and me got into that between $1 and $2 a share, and I think it went up to about $170 a share ultimately before Inco paid about $4.5 billion to take them over. I got my clients down here into Aurelian Resources around $3 a share when they announced their big Fruta del Norte gold discovery in Ecuador. And within two years, Kinross paid the equivalent of $34 to take them over. So those are some of the better discoveries that have hit home runs for investors. I think there's 3 or 4 examples of new discoveries out there right now that I'm aware of in the last, say this year. So one of them was just made about 10 days ago. It's silver. And then we had a nice gold discovery earlier in the year. And then a nice copper discovery over in Australia. I think those are the only 3, but the stocks are all up, 300 to 500% in this kind of a market. So that's what I'm always looking for, is the next brand new significant discovery. They're far and few between. In good times, in good markets, when exploration companies are able to easily raise money to go exploring, you might get 3 or 4 good-looking discoveries in a year. And, the last 2 high-profile discoveries that were made in the junior sector were back to back about 2.5, maybe 3 years ago now, Reservoir Minerals and Fission Uranium. We almost went 2.5 years without a significant discovery. We've got a couple of new ones this year, but none of them are, really monster-sized deposits. They might be 1 to 3 million ounces of good-grade gold or silver. That's nice, but for the most part, Barrick and Newmont and Goldcorp want plus 5 million ounce deposits, ideally better than 10 million ounces. We haven't had one of those for quite a while.
Steve, the implication of bifurcation is that expertise in the sector is worth paying for, and an experienced investor who has weathered several markets is more suited than a novice to identifying particular names. So to that point, you've suggested prior to the interview that I could give out your email and phone number, and for any of our listeners interested in getting a free review of their junior portfolio or gold portfolio, they can go ahead and contact Steve. The email is Todoruk, Todoruk at sprottglobal.com, and the number is 1-800-477-7853. Steve, I want to ask you if you have anything else to add at this point.
Let's hope we're getting closer to a bull market. We're all getting worn out.
Yeah, well, I'll second that thought. Steve, once again, thank you so much for joining us on the show today.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?